on Sky News Business. This is Trading Day, The Close.
Good afternoon. Great to be here with you on this Thursday afternoon. What a day it has been. Still trouble in Canberra weighing on the local market, with the 200 looks to be finishing about 0.25% lower, or about 15 points. The financials really being dented as risk sentiment continues to wane. And of course, yesterday, that company tax cut not getting through the Senate, and a defeated Malcolm Turnbull. Admitting defeat on that one as well. WiseTech Global, though, you cannot look past this company, up a further 20% today in the wake of its report. It's the star of the session, second straight runs of gain. Also making news this hour.
When the party room meeting is called, I will invite a spill motion to be moved. If the motion is carried, I will treat that as a vote of no confidence, and I will not stand as a candidate in the ballot.
Chaos by any estimation, with the political leadership saga continuing in the Liberal Party. All signs pointing to a midday meeting tomorrow could signal the end for the current Prime Minister. And the deadline passing for U.S. President Trump's latest round of tariffs, 25% on $16 billion worth of Chinese imports, are now in place. We've got a great program lined up for you. Reporting season coverage continuing in full swing. We have two CEOs coming up in the next hour, Can Group CEO and also the CEO of Iris. So don't go anywhere. I'd like, though, to just look at what we're expecting in the European session. We do have flash PMI data due, and we are anticipating an uptick in France. Analysts are estimating Germany, though, will see some cooling for the month of July. Markets all expected to open lower as markets digest concerns that we have around trade and those tariffs that have come into place. Quick check-in on where U.S. futures are sitting at this stage of the game, looking to a lower start to the open, so adding to the losses we saw on Wall Street through the overnight period. Well, we've got plenty to discuss with my guests in studio. Claude Walker, he's joining us from Simply Wall Street, and Lawrence Parker-Brown, he's from COSEC. Gentlemen, welcome to the program. So the Prime Minister, Malcolm Turnbull, survives another day, which means that we have another session, at least to start with, a lot of uncertainty casting a pall over the Australian market. Have you been surprised by the extent of the selling we've seen off the back of this instability?
As you say, there's a lot of counterbalances happening. We've got reporting season and we have turmoil overseas. Domestically, we weren't quite sure when there would be a potential leadership challenge, if at all. So there's so many things for investors to look at. I suppose there's some really encouraging specific reports from businesses, but as you say, markets are never really big fans of uncertainty, and this is likely to be a pretty eventful 48 hours domestically.
Yeah, underperforming regional markets, although we did have a negative lead in. We had those FOMC minutes, I suppose, setting the tone as well. You know, it certainly seems as if we're on for another couple of Fed hikes coming through 2018. Where was your focus, though, Claude, today?
Well, like everyone else, I have been following the news in Canberra, and what we've seen today is some strong results in earnings with smaller companies, but the big banks have been down across the board, which may reflect, you said it yourself, the uncertainty coming from Canberra. I think probably what markets are probably thinking about, but maybe isn't in the news so much now, is supposing we do have a change of PM, that may lead to further instability, because we have this issue beginning around Peter Dutton's eligibility to sit in Parliament due to these childcare centres he owns in trust.
Not only that, but we have other names throwing their names into the ring. But the very real possibility of an election coming either in October or at least by May. An election could very well mean a change in government, and some of the policies enacted by Labor perhaps would not be as friendly to some areas of the market.
Absolutely, that would be the bigger change, I suppose, and perhaps some of those changes around franking credits could affect a lot of investors. So, I mean, the banks pay fully franked dividends. You could draw a link there, but of course, ultimately, I think it's just uncertainty sometimes causes a bit of a selling.
Yeah. Ben LeBrun, is joining us live from the Australian Stock Report. He's in our Sydney CBD studio. Ben, what have you been watching? We did hit the low point for the day at about 2:30, just ticking along as we head toward the official close as this final match out goes on. Where was your focus?
It's definitely at an index level. It's just such an unfortunate series of events because late last week we were all cock-a-hoop that we had broken through that technical barrier at around 63.06 and we had blue sky in front of us. Now we knew coming in for business on Tuesday, I think the SPI futures, I know I'm turning the clock back a little bit, but Tuesday SPI futures were positive. We knew as soon as all this turmoil began to sort of come through the media channels that the market was going to be under pressure, and of course that's what we've seen. It's really unfortunate because the earnings, I mean, we've had 75% of corporate Australia now report, and they're looking at around about 13% earnings growth at the moment, which is terrific. So the earnings are starting to substantiate these moves higher that we saw. Wall Street on the cusp of an all-time record high, but good old Australia, one to never let us down in a political sense at least. Now we've got this instability, and we know that markets do not like uncertainty, and that's what we've got in spades at the moment. Of course, if we're talking about a change of government, and the franking credits, we'll be taking that one to the streets. We're already trying to devise strategies to stay ahead of the curve in that front if that does come to pass. And let's face it, markets do not like a Labor government. They way prefer Conservative governments. So obviously, from a market perspective, that's kind of what we're hoping at this stage. But it's just such an unfortunate, as I said, chain of events or this political uncertainty because we were looking so good and those earnings continue to come in. And I've got to say, I'm impressed for the most part. Even the top echelon names that drive the market, to my mind, have all been pretty much beating expectations. So it's been really encouraging. Hopefully we can get this political uncertainty out of the way and we can focus on the clear air in front of us.
Okay, so let's just focus in on reporting season then for a moment, Ben. We had South 32, we had Qantas. The list is long. We really are in the climax of reporting season. Santos, I suppose, is one that we can look at today that did have an outsized outperformance, up by 11%. Now, is that a reflection of the return to the dividend, really speaking about confidence in the future, or is it a reflection as well about the purchase of Quadrant Energy? How did you sort of break it down?
I think first, foremost and uppermost, it was a reflection of the acquisition of Quadrant Energy. I mean, it was, no doubt it had its defensive sort of capabilities in terms of the move, but we're seeing a bit of a throwback to the old Santos of 5 years ago, this growth company that we were expecting we'd earmarked for really big and bright times ahead. Of course, no sooner we thought that than we got the oil price crunch when the oil price went back to 30 or 20. It started with a 20 handle at one stage, I think, and really Santos was staring over the precipice. But its profits doubled today, albeit the profits might have missed a squeak. We had the oil price, the crude price was up by 3% last night, and a return to dividends, and the dividends were probably even better than what the market was anticipating. But I still think it was that move, that acquisition that they've made. They've got on the front foot. As I said, it could defend, potentially, the Harbour Energy if they come knocking again. But I'm impressed because, as I said, if the oil price was still $20 or $30, Santos would not exist in its current form. It would have been taken out. They've got great assets, obviously, but they've done a really good job. They've got costs under control, and it was a good set of numbers today, but more importantly, a really good acquisition, in my opinion.
All right, I'm going to just sort of move on and move between some of these company names quite rapidly because I'd like to get through as many as possible. And if you're talking about oil prices, you can't look through what we heard from Qantas today. So different market reaction to the results coming through. Dividend came in, Lawrence, pretty strong. Profits looking good. But there was a lot of sort of reflection in the market as to what higher fuel costs will mean for Qantas going forward, even though in our conversation with the CEO, Alan Joyce, a little bit earlier on, he did, speak really positively about the company's hedging and how that will help mitigate some of those rising fuel costs. Let's take a listen.
We believe that the A380s do serve a good purpose, and we do believe that our fleet replacement program helps us coping with fuel. You're right, the biggest issue we had in the fleet are the 747s, and by 2020 they're all gone. We actually at one stage a few years ago had 30 747s. We're now down to 11, and they're all rapidly retiring from the fleet.
And of course the fleet, the improvements to the fleet. Alan Joyce talking about quite eloquently. He loves that sort of part of the business. Why do you think that the market sold off on the back of this update, down 3.3%?
It is interesting. I mean, it's been an eventful sort of 18 months for Qantas. It got as high as sort of $6, went right down to sort of $4.40 or similar. I think the CEO, as you say, Alan Joyce, is a very mathematical mind, and he's very astute as a CEO and has been in for a long tenure. So there are question marks about how the longevity of him moving forward, as well as it being obviously an airline that has Jetstar. A lot of people are excited about that potential annuities type revenue stream that comes through from the loyalty program. So I guess to some extent it's a reasonable report, but the market's sort of priced in where Qantas maybe sort of is probably fair value. But we do think it's a very well run business, and I think if we can continue to see the business transition into a conglomerate with different interests, I think it's decent value in terms of a long-term play.
Okay. I'm curious to segue from Qantas to Webjet, Claude. Webjet, I was speaking with the CEO of the company, John Gusick, a little bit earlier on today. I mean, things are going along swimmingly for Webjet.
Absolutely. This is a stock I've followed for 5 years now, since it was much, much smaller. Its share price has performed magnificently, but driving that has been a genuine growth in the underlying business. Now, that's both the domestic service that many viewers would have used themselves to book flights for a competitive price, and there's also another part of the business that is really starting to take off now, which is the web beds business, and they've driven that through acquisition, and also in this report it's showing some real organic growth. And in that business they provide a hotel inventory to other real estate agents, so it's a business-to-business part of it, and that is starting to generate profits, showing that there's global growth beyond the fantastic domestic business that we all know about.
Yeah, well, here's John Gusick a little bit earlier on talking about, I suppose, acquisitions and growth going forward.
We've made 2 acquisitions, and that's where we've invested significantly in building out our global capacity. To that extent, we've now built a global network. As a consequence of having a global network in place, as we add and sell more inventory through that network, we're seeing outperformance results. So as you touched on earlier with some of the impressive statistics that the business has been able to deliver, the most impressive has been our B2B business, where our organic growth rate is 65%. So if we can keep banging out those sorts of numbers, we will genuinely become the number 2 player and a big growth opportunity for the rest of the Webjet business.
Impressive share price performance today, up by 18%. Not so Ben Lebrun for Flight Centre. Flight Centre shares down 8% in the wake of its results. So where does the concern come in going forward for the market when it comes to Flight Centre?
From Qantas to Webjet to Flight Centre, is there a theme going on here today?
Yeah.
Look, the unfortunate side of the story to the numbers today, everyone will look at it and go, right at smack bang, the ding-dong top end of guidance. You know, what happened? Why was it down 9%? The problem is that consensus forecasts are expecting a beat on earnings guidance, if you can believe it. So I still, 12 months ago, this one really polarised market pundits. You either loved it or hated it. There was a lot of short interest in the stock. And the point that I wanted to make, everyone says, you know, short, I don't like stocks that are short sold. Well, you know, the counter to that is if the shorts get it wrong, there's going to be a squeeze. And have a look at that chart that we're all looking at now. That's just been a thing of beauty since probably late last year, and certainly the February earnings numbers. But it was a miss on consensus, cash flow a little bit weaker as well, and they didn't offer any guidance, which is a nice change for Flight Centre because they kept having to revise it down in the last couple of years. So it was good numbers, just not quite where the market was hoping for, though.
All right, Ben, we're out of time. There's just so much to cover today. Thank you so much for joining us. Appreciate it.
Thank you.
We will talk WiseTech a little bit later in the piece. I'd like to just get you across the market close today. The official close down 22 points, 6,244. Boy, that 6,300 level does seem a long ways away now. The All Ords down 0.2% or 14 points, 6,360. Stay with us. When we return, we'll be diving into Jackson Hole, if that's possible. Kyle Roda from IG, Mark Lim from AFEX live next.